Hey everybody, I'm Tara Kumar. I'm a finance professor. I had made a video earlier on why cash is the worst investment. And in that video I reviewed this figure, and it's from a popular book called Stocks for the Long Run. It shows that the value of a dollar compared to 1801 declined significantly, right? A dollar in 1801 purchased a dollar of goods, and that same, if you had held that dollar in cash, you would only be able to buy 6 cents of equivalent goods. If you instead invested that dollar in the stock market, you would be able to buy $755,000 worth of goods, and that's a tremendous difference. So, this is something that Warren Buffett has advertised, which is that cash is not king, and cash is one of your worst investments. But I want to put a caveat on that message, which is that not all stock markets have performed quite as well as the United States. In fact, many countries have stock markets, and many of them have disappeared. Consider that in Russia, the St. Petersburg Stock Exchange shut down in August 1914 because of World War I, and briefly reopened in 1917, and then just stayed shut down for 75 years when the Russian Revolution began. If you look at the communist revolution in China, you have a similar story. And really, the tremendous performance of the US stock market has been a function of luck, perhaps, which is there were a number of scary times, world wars, where we ended up winning, but it wasn't clear that we were going to win. And the stock market was reacting accordingly. So consider this. This is the German market. And you can see here that in the late 30s and early 40s, that you have the rise of Hitler and the Axis, and they're doing better than maybe people expected. And the stock market for Germany is increasing over time, right? And then if you look at the United States market during the same time period, so think late 30s, early 40s, let's look at the stock market in the United States. Well, here's the early 40s. You can see that the market in the United States is declining, right? So late 1941 is there. If we go back to the German market, it's about right there. When it's reaching its high, right, we are reaching our low, right? So what happened? Well, then there was a number of significant defeats for Germany and others. So you had the Battle of Stalingrad, which they lost, right? And you had and the German surrender. And so you can see that as that started happening, right, as there were positive developments for the United States, we had an increase in the stock market. So if things had gone otherwise and we had lost those wars, we would probably be, there would not have been such a good performance of stocks, right? Gold might have looked like the most promising asset to hold for the long run. So there's a lot of advertising of stocks as providing you with the highest return, but they are also quite risky. And there are many examples where they would have been the worst investment. So I hope that closer look was interesting to you. If you like the content, please subscribe, and I'll see you in the next video.